Hi everyone, and thank you for being here. This is Nilabja, and I lead content at Zenskar. Today we have Apurva Desai with us. To introduce Apurva, he is an entrepreneur and venture investor with extensive CFO experience across global media and tech companies in Silicon Valley, the Midwest, and Asia. He began his career at Ernst& Young, Intel, and Yahoo, working on products like Yahoo Mail and Yahoo Messenger. Most recently, he was CFO of Vuclip, a leading video streaming company where he led 10x growth and successful merger and acquisition. Now, Apurva is the CEO and founder of Sarvian, a consulting firm specializing in CFO, M&A, and financial advisory services. Thank you so much for being here with us, Apurva.
Thank you for having me. It's great to share some of my experiences with your audience.
Would you like to expand on your professional journey? Did I miss out anything?
Yeah, so a little bit more on who I am. My background, I grew up in Dayton, Ohio. I'm a Midwest guy, the son of immigrants from Gujarat, India. The bulk of my career has been in Silicon Valley. I spent 20 plus years there. I'm now back in the Midwest in the Chicago area. My career has been mostly as a global executive, a CFO for global growth companies, both big and small. As you mentioned, I started at big companies such as Ernst& Young, Intel, and Yahoo, managed finance for Yahoo Mail, Yahoo Messenger, and then moved on to more emerging growth companies like Glue Mobile, which was one of the first pure play mobile gaming companies that went public, and then later View, which is a video streaming company focused on emerging markets, a Netflix for Asia, if you will, which we grew and led to a successful exit. Currently, I'm involved in a portfolio career where I do have a variety of activities that I do. I have a CFO consulting service through my company Sarvian, where I perform CFO and M&A services for companies. I'm a partner at a early stage venture fund called Interstate Fusion Ventures, which is based in the Midwest, and we connect the coasts to the Midwest. And I also have some investor and operating stakes in initiatives in media, CPG, and technology services, as well as I am an instructor at UC Berkeley Law School in their executive education program, talking about finance for some of their law students and alumni. So that's me.
Awesome. Just to inform our audience, the theme for today's conversation revolves around the intersection of finance and leadership and how industry shifts shape corporate strategy. So I'll dive straight in. Apurva, you have worked in Silicon Valley during various transformations. I want to understand what industry shifts have you experienced that had the biggest impact on your leadership and financial strategy?
Yeah, and so a majority of my career has been in consumer and mobile internet companies, global consumer and internet mobile companies such as Yahoo and Glue and View. And one example of an industry shift that was really profound and impacted how I think about things was in my time at Yahoo Mail, which was in the mid 2000s. Yahoo Mail was at that point the leader in free mail. It had 100 million plus users. Gmail was just now being introduced, and at that time there was a storage limit in mail of 2 meg. Gmail came out and it had 0 users, but they came out unconstrained and said we're going to have unlimited storage. And us with 100 million users and a 2 meg limit, um, you know, 8 out of 10 messages were being deleted. And now suddenly the mark and the expectation was unlimited. We had to clearly change from a 2 meg limit and ultimately go to an unlimited model as well to compete with Gmail. It was a difficult experience having to go back to the CFO and the executives of Yahoo and say, okay, we need tens and tens of millions of dollars of more capex than we planned in our budget to kind of deal with that change. But one of the things I learned out of that was the concept of unconstrained thinking. So Gmail came out there and really said, hey, why do we have to think about storage limits if that's what the industry is doing? We're thinking unconstrained and we're going to go straight to unlimited. And that forced quite a bit of disruption to the industry and gave them an advantage. But how that kind of example has permeated a lot of my thinking has been, oftentimes as we look at new initiatives, it's a good model to think unconstrained at the beginning, and what could we do if we had the lack of constraints, and then start to think about the trade-offs that you might have to make because inherently there are constraints. So, particularly as a finance executive who partners with the business unit, and oftentimes we are viewed as having to say no to the business partners to a particular request for capital or a particular investment. The mindset for me has been I don't want to be a finance business partner that's saying just no. It's like if I have to say no, it's no, but here's how we get to yes. Let's work collaboratively to think about what trade-offs could be made so that we could get to yes, right? So that kind of concept of thinking about initially being willing to think about unconstrained and then think about trade-offs is a way that my kind of business partnership from the finance perspective has evolved. And another example that I've had was when I was at Blue Mobile. We were a mobile gaming company that went public on the backs of feature phones, where those were, those older phones in the mid 2000s before the iPhone came out, where, there wasn't a touch screen. It was not tilting and so forth that you do with those smartphones. And that model required an ability to have a sales force that could influence mobile telecom operators to place your games higher up on the list. It required an engineering team that knew how to port data files to thousands and thousands of SKUs. When Apple came out with the iPhone, it became two SKUs, right? And it created an algorithm that no longer required a sales team to influence a mobile telco to where to place the game on the portal. It was all based on an algorithm. So suddenly those internal capabilities were not needed. And Glue had some challenges because we were focused on our internal capabilities and not as much on the consumer. And the consumer was definitely shifting to a different type of gameplay. So that kind of example really, made me think more about a consumer-centric model, particularly when you're working in consumer products. So those are a couple of, transformations I've seen that have had me think about, how to think about trade-offs, and then how to think more and more as a consumer-centric way as we partner with our business partners.
Right. And with these constraints and trade-offs in place, how did you ensure financial planning and analysis aligned with these industry shifts that you were visualizing across Silicon Valley?
Yeah, I mean, I think it's important to recognize those industry shifts as early as you can, right? And then try to manage your planning with that in mind, right? So, some of those examples will be to be, continuing to understand, what is the value proposition, which segments are valuing this service more than others, what are certain pain points being solved or being more loudly applauded by certain segments, and does that then allow for a belief that that value proposition can lead to a higher pricing potentially, right? And potentially then, do you start to think about how do we move more resources to that segment, right? Do we start forecasting a higher percentage of our revenue to that segment? And is that segment going to have a higher margin profile? So do our planning mechanisms work in a way where we're looking at, hey, how do we make more of our investment move to some of these segments where we think now there's a higher margin profile there and higher growth opportunity on the sales side, right? And thinking about that proactively before we just receive numbers from a sales team is like, these are the questions we need to push back on, and how do we think about what's ideal margin mix in terms of our segments given what we might be seeing in the market.
And whilst doing this financial analysis, what were some of the metrics that you were looking at in the companies that you were working in back then which would help you benchmark yourselves against these industry standards that we're shifting?
Well, certainly in that space where we were talking about consumer and mobile internet products, and of course that answer is different industry to industry. But in that space, we were often focused on more the contribution margin, the unit economics, right? In that space, you need to understand what's the lifetime value versus the cost of acquisition and the ratio between the LTV versus the CAC to help you inform, hey, should we be investing more marketing dollars to acquire users? Is often defined based on the ratio between such metrics of lifetime value versus the cost of acquisition. Um, and the once you kind of understand those metrics, there are certain uh, benchmarks out there that you can use to gauge if are we at the 75th percentile, are we the 50th percentile, where do we want to be in that pendulum to decide how much we want to invest in there. But there's certain targets you can kind of set once you understand the measurement of such metrics, and then where the industry is as defined as best in class for such metrics versus a minimum set for such metrics.
Apurva, we've talked about different stages and industries in which the companies were at when you were working at them. Um, You've also led teams across various geographies, US, London, India, Singapore, and China, to name a few. How does one go about driving a single company culture while also allowing team members to exhibit their different working styles in the realm of finance?
Well, I think, and I think it's not just in the realm of finance. I think that's a company-wide type of thing. The way you would think about a finance team versus any other function in related to that company culture around the world is the same. But I think, oftentimes a company will say, "Hey, these are the principles of our company culture. These are this is the environment we want to create for our employees to work in. These are the attributes of employees that we want to recruit and retain." And if we do a good job in both of those, we think this is going to lead to the environment that leads us to succeeding and excelling. Um, Now, what may happen? So I think in such a scenario, the company thinks this is important that regardless of where in the world we hire someone, we want to be looking to create that type of environment. We want those attributes in the employees we hire and retain. Um, but we might find in some geographies their style of work might be a little bit different than other geographies. So, for example, a an environment attribute that we might want to create is decisive action. Making quick decisions is an important principle for our company, and we want like characteristics of our employees we hire to be they have fire in the belly. They're drivers. They push. Um, Now we know in some geographies that their culture might be it's much more consensus driven. So decisive action is not necessarily the easiest type of environment for them, given kind of the way they grew up and the way their earlier parts of their career unfolded and the way their role models would mentor them. So what we may want to do in such a situation is, give that geography some unique rewards and incentives when they exhibit such behavior. I think we would also take some of the leaders in such geographies and say, let's give you an assignment in another geography that maybe more naturally is a decisive culture, and they can get immersed in it and see firsthand, how that environment might be working. And then after such an assignment, come back to their home geography and have a more real time example how that may work, and then how they can lead that team back in their home geography. So I think those are some of the examples that you don't necessarily um, always to discourage them, but you kind of give them in terms of the way they do work, but you give them additional rewards and incentives to do so and try to make sure they understand why that's beneficial to the company and to create some consistency around the company.
That's super helpful to understand how to, ensure alignment between global finance teams across countries and regions. What I want to understand is how does high-level financial planning look like in companies where finance teams are spread across countries? How do you ensure alignment then?
Yeah, I mean, I think, oftentimes, the financial planning process, I think, has the same principles, whether we are doing it for teams in one geography or teams across multiple geographies, right? We need to create a financial planning process that has a clear planning schedule, clear deliverables, clear objectives, um, clear targets are communicated to the appropriate business leaders. Um, Dependencies are identified, and ultimately we need those dependencies to get acknowledgement and sign off from those particular different leaders. So if you know if there's an R&D center in India, and then there's leadership in San Francisco, and we're asking each to go through a planning process. There should be some sort of a handshake, if you will, that we formally acknowledge that both parties have said, yeah, we understand what the objectives and priorities are for our key customer, which might be the R&D center, might be, supporting some of the leadership in Silicon Valley, and they understand their objectives, and then they've worked on what their needs are tied to those objectives, and what dependencies had to happen first before they could, achieve their objectives. And all of those things are acknowledged and ultimately signed off on before either side is submitting their particular plan deliverables. So I think that's true whether you have everybody in the same geography or whether they're all spread across. But you have those clear dependencies understood, and you've created a construct for both the receiver of the dependency and the initiator dependency to be communicating what those assumptions are to make a more seamless process.
And in a global finance team spread across region and countries, at what stage uh, do you feel the need for financial automation tools emerging? What I'd also like to know is like, who are the key stakeholders who are involved in that decision-making process for the entire team in general?
Well, I think for a finance team, and of course there there are different parameters, right? So affordability is obviously one issue. You might be ready for it, but you have to decide if you can afford to. But some of the some of the parameters that I think are present when you make such a decision are: one, have you gotten to a point where you are having competing investment decisions? You're not just making one product, and the question is, are we just investing in engineers for this product? You have maybe multiple products, you have multiple geographies. You're deciding, do I invest in a sales team versus a product team? But you've gotten to a point where you ongoing have multiple investment decisions that you need to make, and most every company has some constraints, so you have to have a way to analyze each of those alternatives, understand the return profiles for them, and then have some database support for making that prioritization, right? I think you also start to have that need when the industry, the market is volatile, and we have to look at a variety of scenarios to understand how to make those prioritizations on our investment decisions. And of course, we've just come out of a period over the last several years when um, we were dealing with COVID and what did that mean to, the way supply chains worked and the way sales worked. And we needed to look at a variety of different scenarios and we needed to have real-time understanding of that. Such tools help us in such scenario planning, right? And of course, right now there's a variety of unknowns with tariffs and things like that for certain industries that, such scenario planning becomes very important and such tools are real drivers to help manage such uncertainty.
And how much of that decision-making process is AI first? What I'm trying to understand is that what are some of the first few high impact use cases CFOs want to explore with AI and want to ensure that whatever automation software they choose has AI in those particular use cases?
Yeah, and I think you know, from a CFO perspective, there's two lenses to that, right? One is, of course, what's going to make the biggest impact to the organization, again, with some constraints on how much budget we have for AI tools. And most of the research I've read is that there's probably a bigger impact from AI around the development of products and engineering, customer service, operations. And as a CFO, I'm probably allocating more to help those segments first. But when we think about the finance role, I'm looking at particularly two areas. One around productivity, and the other is to help me answer the question why around performance and what's happening in the business. In productivity, and this is a driver whether it's in finance or other functions these days in general. But an example of productivity that I'm looking for in the finance org would be, for example, revenue recognition, right? I might have uh, a team that has, I may have tens and twenties of contracts that I need to review, commercial contracts to understand the revenue recognition applicability of those. And in the past, I might have had, my junior accountant read them and then give a readout to the controller, and they might review some of them and make a decision. And then some of them might be like, well, this is a gray area, and then we need to, go bring in the lawyer and work on particular language, and it might take a couple of weeks to go through that process. I think in this type of example, once you have an LLM that's been trained on the criteria in our company for what qualifies for revenue recognition, can you have that PDF immediately be reviewed by that LLM? If there are 50 contracts, is it going to come back and say, hey, these 30 clearly meet the criteria, these 10 clearly don't, and these 10 are in a gray area? And then, my controller can focus on the 10 that don't, and then the 10 in the gray area, and that, that LLM is probably going to also suggest, here's the language that gets the 10 that are not into clearly meeting the criteria, and the 10 in the gray area, it starts kind of having a back and forth sparring conversation, if you will, with the controller on where, here's why I think it's gray and here's where we maybe can move. And it just makes that process much more productive and can be done, fairly real time, right? And then the other example on help me answer the question of why. I think like an example that FP&A typically has, right? We're going to have a um, budget to actual variance analysis that every, team does. And let's say we're reviewing revenue variance, and, the in a national sales team, in a national company, the FP&A team might look at it and say, okay, let me look at it by region. Um, east, west, south, west, they all seem to meet their targets, but the north was off by 50%. So the reason we have the variance is because of the north. Okay, now let me go talk to the sales team. I go talk to the VP of the sales in the north and ask what happened this quarter. And usually the VP of sales might say something like, well, it's just timing. We were supposed to close some deals and they moved to the next quarter. and we also had some salespeople we were supposed to hire. They'll probably say, but our HR team uh, doesn't know how to recruit. They didn't give us good candidates, and we didn't fill these roles in time, and therefore we were slow in closing some deals. And and then they might just say that's it, right? And the FP&A analyst might accept that and just say it's timing and it's slow hiring. Um, but in a world of AI, if we're able to connect the data and we have diverse sets of data connected and analyze and looking for patterns, you know, let's say we could see that, well, each region had three new sales hires that were in their budget, and we were able to see that in the interview process by going through the recruitment tool that's there, and we see that in the South and the West and the East, they all had like 3 rounds of interviews, while the North had 5 rounds of interviews. And so candidates in the North were getting frustrated and dropped out, and therefore they weren't able to hire fast enough, right? Um, so that might help me understand, okay, the reason why they're not hiring fast enough is not because we couldn't get good candidates, is for whatever reason, we've got 5 rounds of interviews there. We're frustrating candidates and they're dropping out. Now, my salesperson would have never communicated that to me. I might not have thought to ask the HR person, but if I have the ability to kind of connect the dots with data, can I find that pattern, that the AI kind of doing the brute force and looking at all kinds of connections and come back and say, oh, here's potentially an outlier in the North. And that helps me explain why a lot better than I knew before, right? So I look at that as a high impact example for me as a finance leader and helping drive understanding of our business, and then try to mobilize change by getting them to say, let's change your interview tactics and process.
Yeah, at the same time, there are also several hot takes that are being delivered around AI and finance. If I had to go to one, would be like a McKinsey report, which predicts that by 2030, AI could automate up to 40% of accounting tasks globally. Then, on the other hand, you have a PwC report which says that only 1 in 5 accounting jobs are at risk of full automation, that too in the next decade. With so many hot takes around AI models and the world being increasingly driven by um, AI, what are some of the soft skills or leadership traits that you believe will remain irreplaceable in this AI-led era?
Yeah, so I mean, I think I think in the future we're in a data-driven world. AI is obviously part of that. The ones who have ability to understand data structures, understand what is being measured and should be measured, and then the person who also knows, okay, once they get the data, there's so much of the data there, they understand how to find insights, how to prioritize what's good data, what's bad. And then the person who also knows how to take those insights, and they have storytelling ability, they have business partnership ability, they have influence ability, that they can mobilize and make change in organization, are the people who are going to be the leaders of the organization, right? So that, particularly that third part, AI might help us find those insights. It might help us, but oftentimes AI is going to show us so many insights. But that person who understands, okay, how do I help prioritize this? Which one is going to make the biggest bang for the buck? Um, and they might be sparring with AI to help them do that, but one that the ability to help prioritize. And then the third part, which particularly in an FP&A environment, um, it doesn't matter if we just get insights and we aren't able to have the ability to have storytelling ability to influence the operational leaders to make a change in the way we're doing things, right? So that mobilization and that influence, AI isn't necessarily going to be able to make that happen, right? So we need those soft skills to one, understand how do I mobilize and create change that requires the ability to storytell with data, that requires the ability to understand how do I prioritize which data to storytell, and then that requires the ability to how do I create business partnership and influence, which sometimes means I need to know who do I have to get as the first person to buy in so that person can be my supporter to then get others to buy into this change, right? And those skills, I don't think AI can replace that in an FP&A environment where we're trying to create change in a particular behavior or a particular approach. So those skills will be paramount still.
Yeah, that seems like a super helpful response for anybody who is looking to upgrade their skills or is looking to actually have those skills inherently, which make them irreplaceable in their company. My final question to you, Apurva, would be that you have merged your high-tech CFO careers now into a portfolio career, which includes venture investing and entrepreneurial endeavors. How have you enabled this evolution, and also how have you felt confident that you were ready for such broad-based experiences?
Yeah, and I think I mean I've had a very focused career for 25 years as a finance executive and as a finance professional with increasing responsibility over the years. So I've only been able to get to this point of having diverse experiences by having a very focused set of experiences along the way. Now, the beauty of the finance and CFO role is you need to be understand the entire business. You need to understand you need to have a sense of responsibility about whatever's happening in the business. um, you need to be sometimes there are silos in organizations where it's easy for the marketing team and sales team to be focused on their side while engineering and product might be focused on their side. Finance oftentimes has to deal with other all of the different business units and can be a bridge between those units. um, and in doing so, you often underestimate the skills that you've gained in that experience in finance, where we're known for keeping the engine running and potentially being behind the scenes and making things are moving along and we're working on the right things, which is very important. But at the same time, we have become adept at the right time. We are a risk taker at the right time. We are a storyteller at the right time. We're inspiration, a leader to other functions. We become adept at firefighting when certain things start to fall apart. All of those things are important for when you are um, not sitting in the finance seat sometimes, and when you're leading a particular function or a company as an operator. Um, Also in my career, I've also been around different uh, organizations and leaders that you start to see um, pattern recognition of, okay, this is the type of leader that has been successful, or I have a sense will be able to inspire people. And then those are the people who I'm looking for when I'm going to invest in companies with that type of leadership, because you've seen that in successful leaders. How do I find similar patterns when I'm looking at potential companies to invest in, right? And so the experience that you have, oftentimes you also have been there, seen that, and you can provide that kind of consultancy and advisory experience and leadership to emerging CEOs as well, which is what I do in kind of the CFO consulting role. The venture investing, I've built some of that pattern recognition that I use in that space, and then in some of the individual investing and advising stakes that I have and some operating stakes, I've seen how companies run and how companies are led and can apply that through some of that experience by doing that myself. So, it's taken years of being in that seat and being an observation of, observing what's been successful in the companies and then trying to take the best of that and apply it in different adjacent ways.
Thanks, Apurva. I think you've left us with some incredible advice and food for thought with these takeaways that you shared with us. Thank you so much for your time. Do you have any parting words for those who are listening to you?
No, I enjoyed the opportunity to share that with you. I think, like I said, it's an interesting time. AI is changing how we do things in all functions. It's going to change how we do things in finance. I think the opportunity, like I said, is there where uh, we inherently need to understand how data is captured, how we connect data more, how we govern that data, then how do we find insights, and then how do we communicate, storytell, and mobilize our business partners. And that can't all be done by AI, right? So I think there's an element to your earlier question of we need to continue to have those soft skills to be effective in the role. But we have more things to apply those soft skills to if we are able to use AI in a way to help us understand what's happening, and either make things more productive so we have more time to focus on some of the new initiatives, or we're answering the question why in a more impactful way than we were before, that we can now impact the organization to change behavior in a way we weren't thinking about before. So it's an exciting time for finance. But I think there's a combination of data and AI as well as the traditional skill sets that we need to continue to flex.
Yeah, that's a pretty interesting perspective. Thank you, Apurva, so much for your time. And yeah, hope to see you soon.
Thank you.